Now for more on what's moving stocks, I want to bring in David Struzeski, CEO of Sound Planning Group. David, great to have you on the show, especially as we start a second
Thanks.
quarter. And now it seems like these rate cut expectations a bit in flux. What are you telling your clients as we start Q2?
Well, great to be with you here, Kristen. We're at a point in the market cycle here where the Fed policy is not influencing interest rates as much as interest rates are now beginning to influence Fed policy. And so that's a really big distinction here because it's been quite the opposite, at least by narrative, as we were supposed to be cutting rates as of last July. And so, the market has ultimately rallied to these all-time high moments, which is wonderful. I vote that we continue to trend in that direction. But we've done so based upon unconfirmed reports of these cuts. And so I think the world's just taking a pause here. We're looking at this. We just got a couple of hot CPI reports, which I think are actually establishing a new trend. And I know that that's not a popular idea because no one wants to see inflation. But I think that we are likely, as a result of the deficit spending that we're doing and printing, we're going to be seeing higher inflation. And I think as we head into the year, it's going to continue to tick up. And we're going to find ourselves with a handful of questions of how do we really manage this going forward? And the market doesn't currently have an answer.
So what does that mean for investors? David, perhaps more volatility this year. Stocks traditionally do rise around a presidential election. We'll get one of those in November, but corporate America does seem to be holding up. So what should investors prepare themselves for, knowing that, yes, that first rate cut and the path forward for inflation does still seem a bit elusive?
Well, here's the reality. Our entire system has been set up on zero interest rates for about 15 years. And so when you just, change things 2 years ago and we start, flipping the system here and raising interest rates, it affects demand on the market. We've got a lot of supply and demand imbalances that were not there previous to this moment. And so, where do we go from here? Well, ultimately, the Fed doesn't want to drop rates, and make that Arthur Burns mistake where they have to, really just ratchet them up like we saw here as we ended the late 70s in the last inflation cycle. And so, they're trying to remain cautious here. I just don't think that the market has really priced in the fact that, we may not get as many rate cuts as they expect. And then as well, this is an election year, as you mentioned. I think that there's going to be a lot of political instability just because this election is gearing up to be one that, we've not necessarily seen before. Just to be honest, President Biden isn't even out there spending money right now, which doesn't tell me with a lot of confidence that he's even thinking he's going to be the candidate next year. So, this is sort of a weird point that we find ourselves in right now. But hey, everything seems okay. There's still a Goldilocks theme that hasn't been canceled out, at least at this point. And again, I vote that it happens that way. I think that the reality, though, is that the Fed did not recognize even the banking challenges that occurred last March. And as we step into April here, this is a new time frame where consumers pay their taxes, banks have less cash. Typically during this time frame. And I'm even seeing reports right now that banks might have to go to the Fed to get cash reserves just to offset these tax payments. So, how is that ultimately going to play out, Kristen? I think that we move into the second quarter here. I think that we are going to start to see some rises. There's still a market that is priced to kind of perfection right now. And so I think that we could see a melt up, another rally here. But be paying attention to places like gold, though, because how can inflation be under control when gold's at all-time highs? Those two ideas just don't make sense coexisting together. So I don't think inflation's done, and I think that that's really going to be our big challenge.
I guess here's a question for you, David, because
Sure.
some of our viewers might be wondering, should they be adding to the stock market when stocks are at record highs? Does that make sense, knowing that two key factors are so uncertain, right? The path forward for inflation, as well as the Fed's reaction via borrowing costs or interest rates. And so I ask about what point we are in the cycle, because if we do continue to melt up, how long do you think that can continue before there is potentially some sort of larger reckoning that we would see more indicative of a late stage cycle like a recession?
Well, I think you just asked the $1 million question. When does it all start to change? That's one thing that none of us know when it's going to change, how far it's going to drop, how long it's going to stay down for. I do think, though, that there's a high probability that we're going to see a lost decade, which is how we started the year 2000 through June of 2013, 13 and a half years lost, actually. But when it comes down to should we be allocating more into the stock market right now, yes and no. I think that there's a lot of places that we can find great opportunities. As an example, if we look at metal miners, I think metal miners are of value. They're on sale right now. They've been essentially discounted for the last 2 decades. And I believe with this new higher gold price, which, has been knocking on the doors of the all-time highs 4 different times here going back to 2011. So the fact that it's above and it's stayed above since March 8th, I think that that's a really big deal for us to be paying attention. So I really like metal miners right now. And I think that that's a better allocation than just remaining so heavy in tech stocks or just the 7 big names. We're so concentrated right now. I think that that's actually a consideration that we should look at because we're more concentrated than we were back even in the .com timeframe and in tech stocks. So that's an important one to be looking at. But oil is also beginning to make some big moves here. And of course, if we see higher inflation, then the price of oil is ultimately going to rise. I'm bullish on U.S. oil, though. Why? We do it cleaner and safer than anyone in the world. Not cheaper, but cleaner and safer. Those are important ideas, at least in the Western world. And then last, I'd say that we've got a lot of crypto technologies right now that are starting to get figured out. And looking at that in concert with some gold, but I will also note this: silver, Kristen, I think is the most undervalued commodity in the world right now, and you're going to see silver just rally through the end of the year. It's going to make way more than gold will. So there's a couple of ideas there that are alternatives that do have some growth. I believe that the story's right, even if economics are not as strong.
Interesting. What about cryptocurrency, David? I ask you if people can now invest in that in their retirement portfolio. People can get access to it via Bitcoin ETFs, or of course, they can still buy crypto outright. How does your firm look at cryptocurrency, and what's your recommendation to your clients?
Awesome question. Okay, so the SEC has not really allowed us to have an opinion on this until recently. And so what we do as a firm and an organization is, if we have clients that are interested in allocating here, then we'll allocate a percentage. We know where to go. As far as, where crypto assets are, et cetera, the best idea I have is this, or I heard this, whatever you would spend to take a nice vacation over a weekend, maybe with a significant other, if you put that amount of money into crypto, the worst possible scenario would be that you lose one weekend's worth of value. If things really work out, though, then perhaps that one weekend's allocation that you wouldn't have necessarily missed over the long run becomes some very significant amount of money, just given the fact that, yes, it's speculation where we are right now in the crypto space, but we're definitely seeing a lot of moves moving forward right now. I mean, places like Bitcoin, of course, they always lead, but we're looking at more areas like Ethereum, Cardano, some of these smart contracts that give us the ability to, transact very quickly, be decentralized, and make sure that things are ultimately, securitized in a way that our money's our money. We're not getting ripped off. There's not a lot of fraudulent things. And so I think that this technology is ultimately going to really shape the world as things continue to unfold right now. So nice run up coming here in crypto. Obviously moving into this halving cycle here with Bitcoin. Just know this, that I think Bitcoin's probably going to hit 100,000, maybe even 150 by year end. But the altcoins are actually way more exciting because they're likely to do more than double or triple there. If Bitcoin does that same trajectory.
We'll be watching closely. David Struzeski, CEO of Sound Planning Group, joining us from Washington. Thanks for getting up early, David.